Welcome back. Still counting down to pre-open. 5.5 minutes left right now. Mr. Wilson, how to approach a stock like DHFL at 136 now? So much news flow. You think it's bottomed out, or is this one stock that investors should stay away from?
See, Anuj, when that audit report came in about 10 days back, and on that day also I've said that I see the stock bottoming out, and maybe the support of 130 stocks seem to be having good value, though the auditor's report have raised the concerns in respect to the loan sanctions and the monitoring of the funds. But because of the safety seen that no shell companies were seen existing, that was seen to be a very comforting factor. So yes, the things are seen, damage seen having happened, and in fact because of the potential seen in the housing finance sector going forward, and more especially after this GST rate reduction, the focus is seen coming back, and I won't be surprised to see the things happening at the company level of the strategic investor coming in, and the securitization of some of the asset loan have already happened, and apart from that the overall existing promoter scene getting its stake reduced and all sort of things. So that will difficult to give a timeline on the upside that how long, how quickly it can move up, but on the downside I don't think that much fear is there, or much fear or risk is seen from the current level.
Okay, there are some very important updates that you're going to get in just minutes from now on the Jet Airways Etihad saga. But before that, we also have some brokerage views coming in. Rima joins in now to tell us what Macquarie is saying about HCL Tech. Hi, Rima.
Hi, Sonia. Good morning. So this is in reference to HCL Tech announcing yesterday about that Xerox deal worth $1.3 billion spread over the next 7 years. What Macquarie says is that the deal momentum for HCL Technology has been quite strong in the last 9 months, in the first 9 months of FY19. The deal win run rate has gone up by 40% on a year-on-year basis, which will boost the company's organic growth. So in FY19, Macquarie expects organic growth for HCL Technology to be around 6%, which will improve to 7 to 8% in next year, which will largely be the industry growth rates. Also, the IMS business, so the infrastructure management business, which had slowed down, that they believe, will start picking up, and they're expecting a double-digit IMS growth even in FY20. So Macquarie has an outperform call on the company. They have a target price of 1,300 rupees per share. It's one of their top picks in the large cap IT space, along with TCS, and it's predicated on the strong deal wins, which will push up the company's organic growth. Back to you.
Okay. Well, so that's a positive report coming on HCL Technologies. There is also a positive report that HSBC has written on several small finance banks. They've raised price targets. Abhishek, what is the summary of this HSBC view?
Well, actually, Lata, they are positive that, small finance banks have actually performed better on the fundamentals front rather than the wider turbulence seen in the market. So, SFBs have been resilient to the wider turbulence in the market, and this reflects their inherent strength that these small finance banks have. So, the growth in actually microfinance sector is picking up, which is leading to healthy, profitable growth for these companies. And as they leverage their capital, the ROE or the return on equity for these small finance banks can improve. So therefore, HSBC expects the ROE improvement to about 14% for both Equitas and Ujjivan. They have a buy rating on Equitas with a holdco discount of less than 20%. They have a target price at 160 per share, while they have a hold rating on Ujjivan with a target price of around 365 per share. Back to you.
Okay, well, thanks a lot for that. We have about 1.5 minutes left before the pre-opening rates kick in. Mr. Tulsian, from the broader markets, you do have a lot of these consumption stocks that have been doing very well lately, whether it's from the frontliners, it's a Titan, from the broader markets, it's Havels, Bata, etc. What would your pick of the pack be there?
See, Sonia, in fact, this consumption story or theme is really seen to be very much happening, and in fact, we have seen that growth coming in. Why not? I'm not talking of the discretionary spending, but see the FMCG, HUL, Britannia, Jubilant Food, in fact, all of them, Dabur, all of them in Marico, in fact, all of them have shown respectable growth of volume growth of 7% to 17-18%. So yes, the things are seen to be very much happening, and yes, in the similar space. But one point when I go on to the discretionary spending, in which one can include the Titan also, which has to do with the season of the marriage. Also, this time the marriage season is seen to be high, about 60 auspicious days seen, as against 30, 37, 38. But on a comparison comparative basis, now I found Titan to be expensively, priced maybe at a P multiple of about 52, 53 on an expected EPS of, if I take 21, 22 also for FY20. But just a smaller play amount. I'm not saying that this is just a recommendation. The Thangamile Jewelry, which is again from the southern space, again very good performance since its listing post listing of 6-7 years. And that stock is ruling at 17-18 P multiple. So if I compare it with a jewelry, I agree that both cannot get compared. But I think that this over enthusiasm is seen making these few stocks quite rich. But yes, in the FMCG space, we are keeping quite positive view, and maybe in that space, Colgate and Nestle are looking good at a expected P multiple of maybe about 42, 43, or anywhere between 42 to 45 for both these companies based on FY20 earnings. So yes, overall positive call on the FMCG space based on the rural spending, but Titan seem to be fully priced at the current level.
Okay, Mr. Tulsian, the rates are just about coming in and the first ticks are a bit in the red, but not by a whole lot. Okay, it's gone into the green again. It's actually a very flat opening, but very wayward numbers. I mean, Axis down 8%. I don't think the rates are still worth reading. So let it be. We'll allow the markets to settle a bit and get back to Mr. Tulsian for one last question. The dollar costing a little more than 69. The first tick is 69.05. So clearly that increase in long positions, the rupee had swung so much into the appreciation terrain that now we are seeing a little bit of unwinding of those positions. Otherwise, the gush of inflow continues. Mr. Tulsian, I wanted to ask you, what next on RCOM-RGO pact? Now that the pact is called off and it is probably going to the NCLT in full swing, do you think it will be bought at a lower price by the same guys, RGO, because they're the only people with money? Or do you think it will be a piecemeal sale, somebody buying towers and somebody buying spectrum and somebody buying the rest of the business? What is the next step in that saga?
See, Lata, I think there is a totally change in strategy by Reliance Jio, because if you recall, maybe about 1 year back or 18 months back when this deal was entered into, they agreed to acquire the spectrum, tower, fiber and other assets. And if you really see now the development which we have seen on the Reliance Jio front, that they themselves are monetizing the tower, maybe with Brookfield. And now that means that clearly shows that they are not interested in acquiring the tower, and rightly so. I don't think that there is any point in going for the huge capex or maybe acquiring or making the company so much asset heavy when other telecom operators, maybe like Idea and Bharti, rightly, have gone for the consolidation of their Bharti Infratel with the Indus also, where the about 175,000 towers will exist post this merger. And that's the right strategy, that you need to have a separate infrastructure company, passive infrastructure company, to be owned by separate company. So now maybe in Reliance coming on RCOM, when this NCLT process will start happening, probably Jio will only be interested in the fiber and the spectrum. This is what I feel, provided these spectrums are kept alive by the RCOM with the DOT or maybe with the authorities. Now coming on the tower, as we have been seeing, because Bharti Infratel has no existence as of now, because but the merged avatar, as I said, that one with 175,000 towers, with Indus Towers getting merged, that will really be seen the biggest company emerging as this one. And I won't be surprised to see these two players existing in the tower space. That is, one is Brookfield in unlisted space and Bharti Infratel in the listed space. So yes, Reliance Jio, rightly so, will not bid for the towers going forward. And as I said, that they probably may be only interested in spectrum and fiber going forward.
Okay, Mr. Tulsian, we leave it at that. Thank you so much for joining us and discussing a whole host of stocks. By the way, the pre-opening rates have settled a tad bit higher. So it looks like that big gain that we've seen for the last 7 days, that can continue in trade today as well. Jet Airways, though, is the big stock on our radar right now. It's down almost 10% in pre-opening. We're getting more information. This is a CNBC-TV18 exclusive. As the impasse at the Jet Airways resolution continues, banks have discussed replacing Etihad Airways with a new investor. Ritu Singh, who's been on top of all of this since day one, joins in now to tell us more. Ritu, who could the new investor likely be?
Well, it could, we'd be speculating right now, but the fact of the matter is that banks are very keen that fresh equity comes in. If Etihad is to exit and to replace Etihad then with a new investor, we're given to understand that a likely replacement could come in the form of an investment fund rather than a new airline, as far as the talks are concerned, because banks insist there are some funds, we understand the likes of TPG, for instance, that have already done a due diligence on Jet Airways, and perhaps because that time is of essence, they're hopeful that some of these funds will be keen to replace Etihad Airways if it decides to exit, and that is what was taken up by the lenders in their meeting yesterday, that one new equity infusion has to come in, and if Etihad is unwilling to bring it at this point of time and proposing an exit, a new investment fund could replace them, and this will be in addition to another investor, which was part of the bank-led resolution plan, which would be NIIF, which is still, we're given to understand, keen to pick up that 20% stake as was originally envisaged. The new investor would pick up Etihad's stake in the event, of course, that Etihad looks to exit. There is, of course, a need to infuse funds as well, but that will be done as one of the options that lenders have discussed is to give additional funds to Jet Airways on the condition that both Etihad and Naresh Goyal pledge their stake in the airline to the lenders. Now, these are some of the options that have been discussed. We're given to understand that now bank heads will be meeting soon. So far, the meetings have been with, the managements of these banks, but the top bank chiefs will be meeting soon to take a call on which of these options could work out going forward, because they have to come up with a resolution plan very soon, given that, more and more planes are being grounded and things are only worsening for Jet without new funds coming in.
Okay. Ritu Singh, congratulations yet again. You've been on top of the story. You were the first to tell us that Etihad is contemplating moving out, and now that looks like is going to be the way forward. And what Ritu Singh is telling us today is that they're looking also at private equity investors. So, you don't, otherwise the normal guess on the street is the Tatas and people like that. So it looks like it can also be private equity, a professional management, and the lenders slowly finding buyers for the debt that has been converted into equity. Okay, all those options are on the table, but it's not going to be very easy to work these things out. It's a money guzzling industry. Okay, we have to go from one money guzzling industry actually to another, which is telecom. Before that, just a word, the index has settled very, very flat in early trade. So nothing very spectacular at this point in time. Tech Mahindra is starting, 1 minute. Z is the one that's taken about a 1% knock, and Vedanta is up 1%. Otherwise, it's all a small change in terms of moves, percentage moves. Nothing has moved more than 1%, and nothing has fallen more than 1%. With that backdrop, let's discuss a little bit more on telecom. The telecom sector has been abuzz over the last few days. The RelCom-RelGeo pact has come apart, and now it is going to be decided at the NCLT. Bharti Airtel is looking all set to sell further stake in Bharti Infratel, and Idea Vodafone board meet this today may announce the details of the rights issue. Rajiv Sharma, the co-head research at SBI Cap Securities, joins us on the phone line. Well, first up, Rajiv, what are you expecting in the RCom RGO, NCLT proceedings? Do you think the asset sale will happen, but at a much lower price than was originally indicated? Originally we were expecting something like 20,000 crores will come for the banks.
Hi, Lata. Good morning. We do not cover Reliance Communication, but the way to think about this issue is that who will be the buyers and what will be the number of buyers. If there is only one buyer bidding for a spectrum and tower assets, then you may not see value maximization. But if you get to see a couple of buyers, then yes, there could be a better scenario in terms of how much they could raise. But I'll not be able to comment on 20,000 or 25,000. It really depends who is coming for the spectrum and who is coming for the towers. As far as towers are concerned, the larger tendency is from Jio, and if I'm not wrong, the rentals are at discount to market because Jio was doing some kind of capex on the RCom towers.
Rajiv, hi, good morning. So what does all of this mean for Bharti Infratel? You recently downgraded Infratel, but there's a lot of tower assets on the block. As you said, Voda Idea have announced the intention to monetize. Jio also wants to monetize, and Arcom's 43,000 towers. What does this mean for Bharti Infratel, the company and the shareholders?
Yeah, hi Sonia. So as far as Infratel is concerned, we downgraded on the concerns that Vodafone Idea, we see the revenue market share dipping, and we believe that this will translate into cost pressure and indirectly into tenancy pressures for Infratel. Now, there must be a lot of assets, but the question is the moat, business moat is around multiple tenancy. And today, in a three-player market, there is no business for three tower companies. It's about the structure where you can get 1.5 to 2 times of tenancies. If Vodafone Idea are not going to give any growth and they're going to lose market share, I really don't know how should one look at Infratel. The positive catalyst as of now is missing.
Okay, so you have a sell on that stock, on Bharti Infratel.
Yes.
Okay. What about the Voda Idea rights issue today? You think Bharti priced it at a 40% discount? So this one also will go that way?
Yeah, so Bharti sent a 30% discount, I guess. So Bharti priced it 30% discount. So very likely that Vodafone Idea, the benchmark has been set, and that number gets applied or a little more, because you're seeing two giant telcos coming in with the sizable rights issue. So quite possible there could be a marginally more discount applied.
Is there any buy at 22? Is Voda a buy at 22 if that is the rights price? Is Bharti a buy, or do you think that too much flux? You won't have. Do you have a buy on any of the stocks?
So we recently upgraded Bharti from sell to hold, but we believe it's fairly valued as we don't see the capex intensity coming down and no immediate increase in tariffs. Vodafone, we have a fair value of $22, so there's a lot of downside from current levels as per our pre-right issue fair price.
All right, Rajiv, thanks a lot for your time today. Pre-open has settled 20 points higher on the Nifty and about 2 points higher on the Bank Nifty. 9-10 calls then, Sudarshan, what's on your list?
Well, firstly, the Nifty is a buy below 11,500. I think we'll get that level sometime. Infosys is a buying opportunity. Keep a stop at 712 and a target of 735.
Yeah, Infosys did move yesterday with a lot of delivery buying. In fact, the last 10 minutes, it was just about Infosys. Mitesh, your thoughts?
I would choose India. That's a buy with a stop at 114 for targets of 125.
I think the buy coincided with the fact that the rupee suddenly started weakening. And today as well, the dollar is 69.10. So that's quite a distance from the 68.40, 68.50 that we saw over the past 2 days. So maybe IT stocks have something positive going. But before we get to those stocks, maybe you want to take the 9-10 calls.
Prakash, your 9-10 call?
Havells, I think, is climbing to levels closer to 780 zones, stop below 750. That's okay.
Okay, well, no, just looking at a couple of more stocks. Indiabulls Housing Finance is up almost about 1% today. In fact, there's been a bit of a comeback in some of these NBFC names. DHFL as well is up in the green. Of course, there's news flow on that one. But Manisha Gupta is also joining in to give us a quick roundup of all the action in the commodity markets this morning. Hi, Manisha. Good morning and happy Holi to you as well.
Happy Holi to you as well, Sonia. Well, we have seen the crude oil prices continue to hold around those 4-month highs and at a 50% retracement from the kind of lows that we saw in December. It has to do with the OPEC and the allies saying that the output cuts could well extend into the second half of 2019, that they will assess the situation once they see the impact of US sanctions on Iran and Venezuela. Also supporting the crude oil prices is a third straight week of decline in the US weekly inventories, and that has been supportive. And as was being discussed, it is about the currency markets as well. You have the dollar index, which is trading at around 3-week lows, and that has been supportive for crude and the metal prices also. So you have gold trading at a 3-week highs. Most of the industrial metals as well have gained for a third straight week. For the industrial metals, it also is about the China cutting taxes on manufacturing and other sectors from 1st of April. That is a sentiment boost. And also US and China now headed for high-level meetings in Beijing and in Washington, aiming to conclude these talks and come at a resolution by end of April. So that in turn also seems to be supportive. We are trading at multi-month highs for copper, zinc, nickel in the Shanghai markets today.
Okay. All right. Thank you very much for that, Manisha. So those are the commodity cues that we should watch out for. Also, the Brazilian plant Vale is perhaps going to restart iron ore output, and that may have, I don't know, maybe not much of an impact on India, but globally that will be a positive for steel companies. Let's look at how the stocks are likely to open. At the moment, it is looking like it's going to be a slightly green opening. Any further stocks, I mean metal stocks, Sudarshan, on your radar, any of them worth a try, worth a trade?
No, it's really, I would then look at HCL Tech and Tech Mahindra. The IT stocks have the best charts for the day.
Okay.
Okay, well, a couple of more stocks perhaps that you'd want to look at. Talwalkar's is up in the green. The promoter group has acquired about 0.7% stake from the open market on the 18th of March. So that stock is trending higher. Mindtree, there's a board meet today to consider a buyback. So perhaps Mindtree will also be in focus. Mitesh, I wanted your thoughts on Reliance Industries. I mean, it's been the big mover this year, this month. The quick thoughts there?
I think, we've been talking of target of around 1420, 1440 zones over here. I think it's on its way, and I think even long positions now could be warranted with a stop just below 1350 odd levels.
Okay. Wow, that was a photo finish. There goes the bell, and it's well, flat actually. We start at about 11,540. That's about 6 points higher. Sensex starts 38 higher, again 0.1%, 38,400 odd. The Nifty Bank is marginally in the red, but very marginally, 43 points down or 0.15. Hindalco, actually the metal stocks are leading the pack at this point in time, but so are the metals, so are the ITs. Infosys put on another 1.25% and still gaining. Bharti Infratel is up, Indiabulls Housing, NTPC, TCS, Tech Mahindra. So today is an IT day. Quite clearly, as Sudarshan pointed out, don't look at the metals. Though Hindalco and Vedanta are also in the green, it's today an IT day. Wipro as well, up about 0.6%. So almost all the IT stocks are up in the green. The ones in the red, Bajaj Auto is struggling a bit, 1.6 down. Z Entertainment, 1.9 down. HP, IOC, BPCL, all three are down about 0.75%. There has been a minor uptick in crude, but much more of a uptick in the dollar rupee. And perhaps, therefore, a little bit of long positions are being taken off the oil marketing stocks. M&M, JSW Steel, Kotak Mahindra Bank, NTPC, Hero Motor, Reliance, ICICI Bank, Bajaj Finserv, Yes Bank among the red candidates. Okay, well, the mid-caps are absolutely flat, Lata. So the market breadth is in favor of advances, but the index itself is flat. Jet Airways is down almost 4.5% and big volumes on Jet Airways this morning as Etihad is looking to exit that deal. So that's really the stock of the moment. Apart from that, DHFL, where reports suggesting that PE funds like KKR, Bearings, etc. are looking to buy out bonds. DHFL is in the green, up almost about 1.5%. Talwalkar is also trading in the green as promoter group has acquired about 0.7% stake from the open market. So 2% higher on Talwalkar's. And a couple of more stocks, of course, ADAG stocks. Relcom is up almost about 9%. So that's also in focus. DLF, on the back of that Heinz JV, is and the fresh project that they will undertake, is up almost about 1.5% or so. And Axis Bank once again hitting new highs. So from the frontliners, that continues to be the stock on our radar. Some of the oil marketing companies are coming in for profit taking right now. In fact, a lot of PSUs are seeing profit taking, whether it's PFC, whether it's IOC, stocks down about 2 to 3 odd %. Z Entertainment also coming in for profit taking, and some PSU banks as well. Syndicate, PNB. I would like to see the move on SBI because the ramifications of the Jet Etihad deal not going through will definitely be felt on SBI. That stock is down about 0.3% right now. But otherwise, Anuj, it's a flat opening. Perhaps it would be healthy if this market catches its breath at some point in time.
Yeah, I think that will be healthy. But I think DLF is the stock of the morning without a doubt. If you're looking at the first rate, it also was a strong stock, corrected a bit, and now beginning perhaps a fresh up move. So that's something which stands out. IT is continuing its up move, so that's also quite interesting right now. Consolidation perhaps is the order of the day. That happens, of course, on the weekly options expiry day. Weekly options expiry on both Nifty and Bank Nifty is what you have today, of course. So let's see how things move. But Sudarshan, your thoughts on market opening, and is there a trade here?
No, there's no trade here. but a dip below 11,500 is a trade for Friday, which means we carry that position. That should come sometime during the day.
Okay, Mitesh, your thoughts on market opening?
Anuj, I think early morning I've spotted some pharma names are doing well. Cadila is on the list. Aurobindo Pharma, Ajanta are also seeing some continuation. That apart, I think humans can be a positive bet as well. But otherwise, nothing much on the indices.
Prakash, your thoughts?
I like escorts. I think a dip is warranted. A dip comes is better. I wait for the buying zones if I get it. But escorts I certainly like. I think escorts is climbing to around maybe 825, 830 zones. Stop below 800 should be fine. Escorts looks good.
In fact, escorts is one stock which is outperforming. That's the one company where the numbers have continuously looked good. And this morning also, this is the first indication. Just look at that stock move right now. So, looking quite interesting. Mitesh, your thoughts on escorts? That's a big move right now.
Yeah, it's clearly showing continuation on the upside, Anuj, and I think 810 would be a good stop loss for any fresh long entries. I would even look at targets close to about 845 to 850 to begin with. Possibly 880 can be tested here.
Okay, well, two stocks on my radar. Axis Bank, fresh high over there, a 52-week high. And Infosys continues to power ahead, up over 1%. These are the two large caps, Sudarshan. I wanted to ask you about, would you put fresh money to work on either of these names, Infosys or Axis?
Yes, Infosys is certainly worth putting fresh money in. In fact, all the IT stocks, they are bottoming out for the short term and a rally is imminent. Axis Bank, I'm a little, as I told you, confused on banks. Banks are not a buying opportunity at all. In fact, the Nifty Bank is down, it's in the red, and that should persist.
Okay, Prakash, your thoughts on DLF? That's making a fresh move right now.
Dewan Housing Finance. Well, I think
DLF.
DLF, sorry,
yeah.
my mistake. Yeah, DLF I think should be going up from here. I like the first move. In fact, one could have a tight stop below today's low 196 and maybe trade long. On the upside, maybe 204 to 206 is a possibility. The first mover advantage looks like it's there.
Okay, the market seems to be correcting a bit. Nothing alarming. This is after a 1,000-point rally, nearly on the Nifty, some bit of consolidation, 3,000 points almost on the Bank Nifty is what we have. Gentlemen, thanks a lot for taking us through the market opening. We have Rahul Shah joining us, CIO Equities of Tata Mutual Fund now. Rahul, good morning. Thanks a lot for joining us. Your thoughts on how to approach this market? It's been just one way running. Is the market already factoring in a positive political outcome? And is there more to go in the near term then?
I think the way to look at this move is basically in a combination of two things. One, obviously, if you look at our valuation premium to the MSCI emerging markets P multiples, it had come down to slightly more tolerable levels, which was about 40-45% premium from the 60% premium which we were running most of last year. So that obviously led to some kind of a bottoming or a base forming in terms of valuations. And the second point which you make, I think the way to look at it is the market today is excluding the possibility of a hung parliament. I think that's the way to view the move. I don't want to fine tune it any further, and I don't think we should be fine tuning that any further. I think the chances of the scenario where we would have had a very weak government, I think that scenario has receded, and I think that's reflected in the kind of moves which we have seen, and especially in the cyclical sectors.
Okay. Good morning, Rahul. Good to have you with us. But are you getting a sense that the prices have gone up too much? Would you worry about the result season kind of pointing out the gaps where valuations are not catching up?
Again, let me segment that comment in 2 or 3 areas. I mean, if you look at, there are certain sectors which are showing definite signs of improvement, bottoming out, and corporate banks is now a consensus kind of trade to play that bottoming out theme. Similarly, on the capex side, we have seen some green shoots. So I'm not too sure that we should paint the entire market move with the same brush and say that the move is over and we are not going to see any further upsides. I think we would probably see more selective upsides. And the other segment which has seen a move, and I think the dichotomy between the growth stocks and the value stocks had become a bit too much. And we have seen certain positive developments on the utilities side, on the regulated return side. So all, a combination of all these factors has also led to not only the banking sector doing well, but also within the value segments, the PSU segment, and I'm not talking about the PSU banks here, I'm just talking of the non-bank PSUs, also were quite attractively valued, and there have been a few triggers, fundamental triggers for them to do well. So I think it's been a much broader move in the markets, and not just an overall re-rating.
Sure.
I mean, in fact, most of the sectors which did well last year have lagged in this rally.
Okay. Well, for now, the space to watch on the upside is definitely the technology stocks, not just Infosys, which has been the leader since yesterday, which is now up 1.5%. Wipro is also up 1.5%, and Tech Mahindra is following suit, up about 1%. Rahul, good morning. What about the IT space? So far this year, it's not been a great performer, but it's had a consistent, it's given consistent returns over the last few years. Would you top up in many of these large cap IT names?
Well, I think the IT sector is will give steady returns, but moderate returns this year. I think that's the expectation one should have. Last year was the year when there were earning upgrades and valuation upgrades. So there was a kind of a virtuous cycle which you saw in these stocks. This year you would probably continue to see earning upgrades or earning delivery at least, but the valuation upgrades may be very difficult to come by. So valuation re-rating is difficult because most of these stocks are trading at a marginal premium to their historical trading ranges. So we would not see a valuation re-rating like we saw last year, and therefore I think for a moderate return and a neutral stance, that's good enough for this sector.
Okay. Rahul, I wanted to know about oil marketing companies. I mean, is there still space? Actually, where do you still find value?
Well, I think in the on the utilities side there is value. I think on some of the corporate banks there is still value. I think the theme of the bad asset cycle, bottoming out is going to be much longer. It's getting priced very quickly in the stocks, but I think there are other changes happening in the banking sector, which is the pricing power, the loan growth, and also in some cases we also have levers on cost to income side. So I think that is probably not over. I think it's going to last us for a fair amount of time. So these are the two segments clearly we see where there is value. On the IT side, at least, I mean, I see that right now in a no man's land, but it's a sector which should deliver consistent, steady returns for this year. Nothing like last year, but consistent returns should be possible.
The corporate banks that you speak about, they've risen like 50% in the past 3 months. I mean, look at Axis. 500 levels and now 760. Okay, ICICI Bank perhaps has not risen as much, but they're all at, multi-year highs. Corporate banks are still a buy even at these levels?
I think so. I mean, first of all, I think we should stop calling them corporate banks anymore, because if you look at their book and if you look at their asset mix, it would resemble any other more respected retail banks if you see. So the valuation gap is still there. Obviously the run-up has been sharp, so we could have a breather or two. That's part of the rally. I mean, that's part of any re-rating exercise. We have seen it in any other sector which you see last 3 to 4 years. It is never a one-way street. So a small pullback, a small breather cannot be ruled out, and that's definitely not something which we are trying to predict, and that's very difficult to predict. But if you look at these stocks over the last 3-4 year period, I mean, they still haven't done anything. So one has to kind of elongate the period in which you are evaluating these stocks from a price performance point of view, and you would see that they have hardly delivered any meaningful returns. And the good thing about the banks is that once they achieve the re-rating and they are past the hump in terms of the NPAs, etc., they are still compounders. So what we see in other retail banks will continue to hold true for these banks as well, as and when they reach that stage where you can say, okay, the valuation re-rating is over, now we just track earnings or just track the ROEs. So I think that is what makes the sector interesting. So it's just not a one-time re-rating and then what. It is going to be, they are going to be compounders even after that.
Okay, for today, the market just wants to focus on IT, and for good reason. From yesterday's low, there's quite a bit of move on the currency, and the mid-cap IT space is now surging. You know, look at names like, especially the strong names like Tata Elxsi, NIIT Tech, that's been a strong stock. So a lot of these stocks surging right now. That really is the sector of the day, and that's helping the Nifty recover from the low point. So Rahul, thoughts on autos? That's one sector which had badly underperformed last year, and it's no different, this year as well.
Yeah, I think the autos, different companies are struggling with different problems. We've had a problem of stagnation in some segments. We've had a problem of lack of new product launches. So there is a sense of fatigue in some segments. There could be cost of ownership issues in two-wheelers, which is kind of resulting in a slowdown. So it's a combination of factors, and especially companies which are more dependent on urban demand are seeing slowdown further. So I think it's going to be a tough year for autos from what we can see. You could have a recovery in the CV cycle because of pre-buying for BS6, but next year becomes then a question mark. Similarly, for four-wheelers and two-wheelers, I think it's going to be a slow year. So one will have to be much more stock selective. We cannot buy autos, or we cannot have a uniform view on autos as a sector in this year. I think it will have to be more bottom-up, more valuation-driven calls rather than a thematic call.
Okay, that's actually what I was going to ask you. But I take your point. You cannot buy the distress entirely. Rahul Singh, it's a pleasure having you with us. Thank you very much for joining us. Have a great Holi. Greetings to you and everyone back home and at your team. Okay, we'll start off the next conversation where we left off. The auto sector. Inventory pile-up has been the theme, and we've heard both four-wheelers and two-wheeler companies cutting their production and likely to keep the production down for maybe the next 2 months. Inventory, we believe, is as high as 2 months to 3 months against the normal 1 month inventory. Rajiv Bajaj, Managing Director of Bajaj Auto, is with us. We also have two other auto company experts, Sunil Bohra, the CFO of Minda Industries, and Arvind Kapoor, Chairman, Managing Director and CEO of Rico Auto. Gentlemen, thank you very much for joining us. Rajiv, good morning to you. And just give us an idea of the industry, not Bajaj Auto. Is the sector now absolutely chock-a-block with inventory?
Good morning, Lata. Well, the short answer, I think, is yes. We are all aware that growth rates really dropped off since October. The reality is that most people did not anticipate this or chose to ignore it. And that is why what you said is absolutely right. Inventory for some is actually, I think, in triple digits, 100 days or more. They may or may not acknowledge that, but that is the reality. And in terms of production cuts, typically I hear of some of the big makers effecting about a 20% cut. And don't be surprised if on 1st or 2nd April you find out that some of the big ones have cut back by as much as 50 or 60% in March.
Okay. Rajiv, hi, good morning. Happy Holi to you and your entire team at Bajaj Auto. Will Bajaj Auto be cutting production at all?
Happy Holi, Sonia. The color of Holi seems to be black and blue for us this time around. No, for Bajaj Auto, I can say very confidently we are in a good position. I think this is basically for 3 reasons. A, we did not crank up production and therefore inventories as much as the others did pre-festive. Secondly, we preferred to be safe than sorry, and therefore we had a strong promotion lined up for the festive season, which kept our retail momentum very strong, and that continues to be strong. And I think most importantly, we anticipated this scenario and had a very clever strategy in place to address 3 very clear segments of price entry and premium with 3 brands, CT, Platina and the Pulsar. And we worked on them on all 3 important or 4 important aspects, I would say: product, price, promotion and distribution. As a result, We are at 55 days of inventory right now. I can tell you very specifically, our retail this month may be 200,000 or a little more. Our stock is 375,000, so that's about 55 days work. And we have two choices because we are not happy with 55 days of stock. We can either reduce stock to 45 days by reducing the inventory, or we can push up our retail. And I think we are going to push up our retail. You will see it moving up. I am very confident in the next 2-3 months to 250,000 or thereabouts. And then we will be absolutely comfortable at 45 days of stock.
So from the 1st of April 2019, we were discussing this earlier as well, the prices of bikes will go up across the industry because of the new ABS norms. Will that impact demand further, Rajiv?
I think so. What's going to happen is for motorcycles up to 125cc, where we are a smaller player, I think prices will go up by approximately 1,000 rupees as a combination of CBS and the registration plate. For motorcycles above 125cc, where we have larger stakes, this will be somewhere between 7 and 10,000, depending on what exact solutions of single channel or twin channel ABS manufacturers choose, and whether they choose to just pass on the cost or put their margin also on top of it. So that would be the range. I'm aware that people anticipate this to impact Bajaj more because we have close to 50% share in that segment. But I can tell you, we've thought this through very carefully. And you will see from April that we have a very smart strategy in place to counter this. There will be no let-up in our volumes or in our share. We will maintain our bottom line because we have a clever product strategy in place for this.
That's good to hear. But now, Rajiv, if we can just look a step back and look at the well springs of this problem. Is this all about insurance, NBFCs not funding, that kind of problem? Or is there some kind of a slowdown in the economy? In that case, it'll take a little longer to mend.
I think, first of all, I have to say I'm not an expert of this, but I would be on safer ground if I were to say it's a bit of both. And I'll tell you why I think so. These three factors that have been talked about ad nauseum the last few months. One is the liquidity, one is the insurance, and also the fuel price hike, I would add to that. These three factors have definitely played a role. Having said that, the reality is that these were well known in September, and CEO after CEO and marketing head after marketing head have appeared on your channel to say that we've taken that into account, but we are going to have a bumper season because of whatever reason. So either people have underestimated the impact of these factors, or perhaps, these are secondary. Perhaps there is an actual underlying malaise which is more responsible for the problems that lie before us. And I suspect the latter is true, and I'll tell you why. Because I see it in the changing structure of industry. I see the fact that in the last year or a little more, the entry segment, which was under 20% of industry, is now close to 35%. Why have people become so sensitive to operating expense of a motorcycle that the entry segment has doubled? Why has the mid segment of 125cc motorcycles dominated by Hero and Honda, which used to be 27% of the industry as a segment share, dropped to 18-19%? Why is it in the sports segment, a 350cc motorcycle isn't as hot as it used to be, but a 150cc Pulsar has grown by 60% this year? So I think if we just, stop doing this economic guesswork and look at the shift in the segment of the industry, which to me is far more relevant, it speaks very clearly for the fact that people want to buy something that's a little cheaper.
But these are
actually, you have a nose for the economy much more than many economists, Rajiv, I must say. I mean, this is consumer downtrading.
Yes.
No two ways.
And now, if a bike is going to become costlier by almost 8,000 rupees because of the new norms, I don't know how customers are going to receive this. But what will all of this do to growth, Rajiv? The two-wheeler industry has grown less than 7% if you look at it from April to February. Are we looking at single-digit growth this year? Of course, that's the expectation. But even next year?
Well, as you're aware, Sonia, the last, since October, second half is actually negative. So anything positive, I think the industry would receive happily and gratefully. Having said that, it's going to now get, camouflaged by this apparent move by some of the big makers to temper their dealer stocks, because if they are going to drop production and therefore billing or primary sales to dealers by as much as 15, 20 or even up to 50% as someone is probably going to do, then the industry is going to actually show strong negative growth, at least till June, because I suspect the marriage season of April, May, June people will lean on that very heavily to liquidate stock. So I don't know what will happen for FY20 as a whole for industry, but the first quarter logically should be strongly negative.
Okay. Rajiv, it's been a pleasure. If you don't mind and you can stay on, we have two other people from the auto ancillary. Yeah, two people from the auto ancillary space who can give us more colour. Mr. Sunil Bora and Arvind Kapoor. Gentlemen, thank you for your patience as well. Mr. Bora, first to you. What are you noticing? Is there more downtrend in the four-wheelers or more in the two-wheelers? Just give us more colour in terms of demand and pick-up by the OEMs.
Yeah. Hi, Lata. I think from a demand perspective, we heard what Mr. Bajaj said, and we normally have no business to second guess what our customers say. And we all know that the second half of the current fiscal from October onward has definitely been under pressure. But what we have been doing is, in addition to adding more products and more premiumization, we have been able to withstand that pressure. Even if we see from industry perspective, while the second half has been broadly 8 to 10% lower, we have been able to maintain our revenue. And going forward, we are all echoing what the customers are saying, be in terms of four-wheelers or two-wheelers, that up to June, at least there are no signs of strong revival. We are tightening our belts. The focus is mostly on quality, delivery and development. And we are continuously working to up our portfolio in terms of offering to the customers, which is now we are adding sensor plant, we are adding the alloy wheel plant. Recently we have acquired a seating company called Harita Seating. So we have been trying to withstand this tough time. We all know that the long-term story for the country is intact. We are very heavily, I would say, not that extent of penetration in terms of four-wheelers. So we believe that four-wheelers may actually see more growth going forward as compared to two-wheelers. But both the businesses, we are confident, will grow. The Indian economy, we know, is heavily dependent on auto. The GDP share of the automotive sector per se is roughly around 8%. And we know that the automotive vision, which the government has laid down till 2026, to increase the share from 8% to 12%. So we are very highly optimistic. While this is a rough patch, we continue to work on to see that we deliver more than what the government is expecting and what government roadmap has laid. So we are confident that our growth momentum will continue. In terms of 1.5 to 2x is our stated objective from what customers grow.
Okay, so no signs of a revival until June, but after that things could get better. We have Arvind Kapoor of Rico Auto who also joins in, and Rico Auto supplies to customers across two-wheeler, passenger cars and commercial vehicles, whether it's Hero, Maruti, the Tatas of the world. Mr. Kapoor, what is the situation on the ground currently? Rajiv was telling us about how there could be a 20% production cut by the OEMs. We're looking at 100 days of inventory as well. Will companies like Rico Auto also cut production? And if yes, by how much?
See, this all depends on the customers you are dealing with. If you are lucky to deal with a customer like Rajiv, then of course your sales are going to go up. And if you are dealing with the other customers, there would be some impact. And like we have committed lines for various customers. So those lines are flexible lines. We do switch from one component to the other component for other customers as well. Now, having said that, we are in a fortunate situation that we are exporting, and in the exports, the market is okay for us. And in fact, we should be growing by almost 20% as far as exports are concerned. And in the domestic market, the push that is happening now is to get a larger share of the business. And that's what most of the component makers are vying for. But I'm sure some of the suppliers who are dependent solely on one customer, one OEM, they would be reducing their productions in line with whatever the OEMs are doing. That would happen certainly.
Okay.
But auto is a long-term game, not a short-term game. It's not that every quarter to quarter we got to monitor. What we invest today is probably for the next year, and that's how our OEMs are actually demanding from us.
No, actually, one understands, of course, cyclicality in all industries. But what we are trying to smell is this something like we saw in the late 90s and early 2000s? Or this is a much smaller bump? What would your best guess be, Rajiv?
Best guess, Rata, is that it's a smaller bump because I think the larger part of it is self-inflicted. With some people, really having unrealistic expectations of the festive season and not doing enough on the ground to promote retail while piling stocks into the channel. And then, as is typical, being in a stage of denial for a couple of months and then the water is above the nose. So I think if that had not happened, we would not have seen this kind of, huge peak and then this huge trough that lies before us. So I would like to believe that things will be calmer after July and that this is a smaller bump.
Okay. Well, you're a big export guy, Rajiv, and we just heard Arvind Kapoor also saying that the export market has actually been the relief for him. It should be much more for you. Are things much better outside than inside India?
Yes, at a time when we could not export, my friends like Arvind Kapoor were our inspiration. And yes, I can give you some numbers if you like. Last year, in the last financial year, we finished at close to 4 million vehicles total, which was about 1.6, 1.7 was the exports. You may remember at the start of this financial year, we hesitated to give a forecast because we were really unsure. But now we find ourselves in the closing days of March to be within a kissing distance of 5 million vehicles, so 25% growth has been outstanding. Exports just crossed 2 million vehicles earlier this month for this financial year, so that's been outstanding. And going forward, I can share with you that we are looking at about 15% growth in exports to about 2.35 million vehicles. On the domestic front, a similar growth rate on three-wheelers and the four-wheelers, so hopefully close to 450,000 vehicles. So that's about 2.8 million, and an equal number from the domestic motorcycles. So all in all, we won't get within a kissing distance of 6 million next year, but we'll get within a hugging distance of 6 million next year. And I have to say 15% growth for next year doesn't excite me. But when you look at it in contrast to 15% degrowth for the industry, then I'm not too unhappy.
Okay, well, that's a very optimistic projection. Rajiv, before we let you go and we go back to Sunil and Arvind, wanted your thoughts on what's happening with this whole theory of pre-buying ahead of the new norms coming in. Because about 5-6 months ago, that was the talk that there's going to be this big wave of pre-buying before April 1st, 2019 and the new norms. But none of that actually played out.
Because there is a fundamental difference between what happened with BS4, which will also happen with BS6 next year, and what is happening now. The difference is this, that both with BS4, for which we take some credit, and with BS6, what has already been announced is that as of 1st April of 2020, for example, you cannot sell anymore a vehicle which is not BS6 compliant. This means that from October or November, manufacturers will start having to turn over from BS4 to BS6, and prices will go up as a result. And therefore, consumers will, it is expected, pre-buy, because they would rather buy the cheaper BS4 stuff than pay 5,000-10,000 rupees more for BS6. So this is as far as emission norms were concerned in 2 years ago or are concerned next year. As far as 1st April this year is concerned, it's only about the safety-related regulations, as we discussed about CBS and ABS. And here, this condition that you cannot sell after 1st April does not apply. The condition is that you cannot manufacture after 1st April. And therefore, there is no pressure, back pressure on manufacturers, and there is no reason for the consumer to rush out and buy in March, because he can still get a non-CBS or a non-ABS motorcycle for up to June because manufacturers have 90 days of stock.
Well, Rajiv Bajaj, it's a pleasure having you with us as always.
Thank you, Lata.
One wishes that you will take to our camera as happily as you take to your phone, and we have an on-camera chat. But have a great Holi.
Thank you. Thank you. You too. Thank you.
Okay, Mr. Bora and Mr. Kapoor, if we can keep you for a minute more. If you can tell us how, you said that maybe up until June you're not expecting things to improve, Mr. Bora. But can you tell us how deep the cut is? Do you expect that, production is going to fall by 25%, by 20%? And how, will cheaper finance? Definitely there will be rate cuts. Definitely the cost of money is likely to fall a bit. Will that be enough to kickstart after June?
So, Lata, if we see on a full year basis, we believe that the long-term story is intact. If we see our 9 or 11-month numbers, the four-wheeler segment has still grown by roughly 1 or 2%. Two-wheeler segment has done a lot better, ranging from 8 to 10%. And there are players who are in the double digits like Bajaj, which we spoke about. So the long-term story is intact. As we said, normally we don't second-guess our customers, but the impact what we are seeing, if you see from Q3 to from Q2, the general volumes have been lower by in the range of 10 to 12%. And that's what we are expecting the next couple of quarters to continue before we sort of see some sort of revival because of maybe funds availability, as you said, or in terms of getting stability in the economy, etc. So I think as an industry, we are all hopeful that from June, July onward, things should start looking better.
Okay. Arvind, the last word from your end then. In terms of FY20 growth, a lot of auto ancillary players told us that FY19 is written off because of how the last half of the year has panned out. So in FY20, are you looking at a double-digit growth at all, or do you think it will be single-digit then as well?
There will certainly be a growth next year. And to your question to Rajiv on pre-buy, I think next year you will see the impact. This year you might not see it because of safety. The safety items which are being introduced. But next year, certainly you see the impact because the price differential between Bharat Stage 4 and 6, there's a difference of about 6,000 to 7,000 rupees, as what Rajiv is saying. And there is going to be an impact as far as the customers are concerned. And you'll see both the vehicles in the market in the month of, say, I would say September, October, November onwards. So there would be a comparison and people would actually make a choice there. So you'll see a lot of buying there. And I see a growth in 20. And I think we should be around 8 to 10%. That's what I would estimate as far as two-wheelers are concerned. In the car industry, I would also estimate around 6 to 7%. That's what we have factored. And the exports should also do well. That's what we have factored. The diesel is going to collapse. That, of course, is the other thing that we are factoring. And whatever investments are there, we are diverting those investments into the gasoline and or electric vehicles. That's what we are doing. But we see a growth in 2020 and we are investing accordingly. And besides that, we also have, like I said, the export orders and for more items and more components with large customers. And I think that would also see our growth taking place next year. So we are targeting almost 20% growth next year. This is our, as per our own budget.
All right, Mr. Kapoor and Mr. Bora, thank you very much indeed for joining us. I think the big takeaway from all the three of you is that this is a minor downturn. We should not run away with fears of the late 90s syndrome where the slowdown lasted for, 3-4 years. And that if it is, 1% growth for four-wheelers this year, we should be able to do 6-7%, as Arvind Kapoor said. And for the two-wheelers, from probably 7% this year, we should be able to do double digits next year itself. If it's a question of a quarter, then I think the markets are not pricing in.
The only thing that's alarming is 100 days of inventory. I mean, that's not normal. It's not something we've seen in a very long time for many of these players. So how are they going to liquidate that inventory? What are the discounts that they might have to give, etc.? The cut on their margins. All of that is something I think the street has already factored in. Look at the fall. The Nifty Auto Index is down 20% in the last 12 months. That was an enlightening conversation with the big players in the auto space.